Hi, good morning, everyone. So welcome to our daily briefing today. So today is November 12th, which is Friday. So let us begin our daily briefing by take a quick recap on previous important economic data. Okay, so the first one is Australia employment change October. So previous is negative 138,000 and forecast is at 50,000, but the actual is just only negative 46.3 thousand. So this is actually a lot lower than the forecast. So this is not a good news. Definitely not a good news for Aussie dollar. And then we go to the next one, which is the Australia employment rate October. So previous is 4.6% and forecast is 4.8%, but the actual is 5.2%, which is a lot higher than the previous and also forecast. So this is not really a good news for Australia dollar again. Okay, then we go to the next one, which is the UK GDP growth rate year on year preliminary Q3. So previous is 23.6%, forecast is at 6.8%, but the actual is 6.6%, which is a little bit lower than the forecast. So this is not a good news for GBP. And then we go to the next one, which is the UK GDP growth rate quarter on quarter preliminary Q3. So previous is 5.5%, forecast is at 1.5%, but the actual is slightly lower than the forecast is at 1.3%. So this is another not a good news for GBP. And then we go to the next previous important economic data, which is the UK balance of trade September. So previous is negative 14.93 billion and forecast is negative 14.30 billion. But the actual is negative 7.74 billion, which is lower than the forecast again. So this is not a good news again for the pound. So let us take a look at the market graph here. So we can see that because of this because of this week, UK important economic data is not doing good, and also the strengthening US dollar index. So we can see that the GBP USD is getting lower and lower. Okay, so we go back to our PowerPoint here. So the next part, which is the previous day forex market volatility review on the market for yesterday. So we can see a lot of new lows and also new highs yesterday and also today. So what happened on the market? Let's take a look on the volatility factor here. Okay, so the US dollar index rose for the second consecutive trading day. It hit 95.19 during the section. So the highest since July 22, 2020. Okay, so it's like 1 year something. Okay, so it climbed 0.27% to 95.13 in late trading yesterday. So the US announced its highest inflation reading in 30 years. That's to tighten monetary policy faster than expected. So we can see that that's why the US dollar rise so high yesterday and also today. Okay, so then we go to the next part of the briefing today, which is in US session, we have to focus on this important economic data. So let's take and also at 1 midnight here, 1:10 a.m. Then we can this will have a Fed Williams speech. Okay, and then we have to let's take a look on the first important US session economic data today, which is the US JOLT job openings of September. So previous is 10.439 million and the forecast is 10.3 million. And the schedule is at it is going to release at 11 o'clock tonight. So if the reading is stronger, that is stronger than forecast, is generally supportive bullish for the USD, while weaker than the forecast reading is bearish for the USD. Okay, then we go to the next one, which is the US Michigan consumer sentiment preliminary November. So previous is 71.7, the forecast is 72.4, and it is going to release at 11 o'clock tonight too. So if higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. And then we go to the last part of our daily briefing today, which is the market update for gold. So the resistance level of today is 1869 and the support level of today is 1851. Compared to the yesterday, compared to the resistance level and support level of yesterday, so this is getting higher and higher. So my personal opinion, I will still take it as still remain bullish. Okay, so I take it, actually I take my personal opinion is bullish since from last week Friday until now. Okay, so what happened? Why I will still take it as a bullish? Okay, so let's read the market trend factors here. So inflation concerns continue to support gold prices to continue to rise, while the cooling of market risk sentiment has also strengthened the dollar. Okay, so in the case that the inflation crisis is temporarily difficult to eliminate, okay, so seems like this not going to fix in short term, in short moment. Okay, so the gold price outlook will continue to be strong. Okay, so the main focus of the day is the University of Michigan Consumer Confidence Index and job vacancy data. So in addition, the speech of New York Fed President Williams, the Fed Williams also needs attention too. So okay, let's take a look on the market graph here. Okay, so the price is now staying at 1855 here. So but if the price break below the support level, which is 1851 here, then we will look for further downside to 1841. But if the price didn't break below, didn't break below the pivot, which is the 1851 here, then we will still continue our bullish trend. Okay, so that's all. Our target is still at 1869 here. So that's all for our daily briefing. I wish you have a good day. So see you again. Bye bye.